Here's how I made 4% trading the euro pound last week in the Forex market.
Okay guys, so real quickly before we start the breakdown, here is proof that I actually sent the trade beforehand. So this is my free Telegram group, which I'll leave a link to in the description. Basically, it's a group where I send all of my analysis. It's not a signals group, I just send analysis, like the potential zones that I'm looking at. And every now and again, I'll send a trade like this, where I say, watching this level for potential buys on euro pound. As you guys can see, the timer is in the right as well, so this is a live market analysis. And then you guys can see that later on we said I'm in this position and I'm targeting this level, as you guys will see in the breakdown in a moment. So just wanted to show you quick proof that I took the trade and I'm not just doing this on bar replay. And I also wanted to give you guys the free opportunity to join that group if you want. The link is in the description, but let's get back to the video. Okay guys, so starting off on the daily time frame. Actually, we will start on the weekly and I'll show you how I use top-down analysis, breaking it down from the higher time frame to the lower time frame in order to catch this 4% on euro pound last week. So first of all, what I saw when I did my analysis was that price had actually come into this weekly area of demand. This sort of zone here, which was the sell to buy candle, which took out this previous high, and we left behind this imbalanced area just below. And what we also had before was that price had induced this area with this wick. We had this small push up on the daily time frame. Price then came back, wicked out that low, and then we had this very bullish move up, and we also took out the daily high. So if we mark that on, we had a break of this previous daily high. That's our change of character on the daily, because before we were in this sort of bearish descending trend. And we also had a wick out of the previous low, which we can mark on as well. I like to mark that on as a sweep, just so I know where price is likely to head based on the liquidity that is taken. So what I then noticed was that once price took out the previous daily high, we started to pull back, as you would expect once price takes out the liquidity. And what I noticed was that we basically had this imbalanced area of demand, where I expected price to give a small reaction and possibly also come up and take out the previous high. But it could also go lower before doing that, so I was just anticipating sort of a small move up. So I simply then waited for price to come into this area. We also had some liquidity that price generated above it, just here, where a lot of people would have been buying because of this previous sort of zone. If we go on the 1 hour, people were probably buying on a retest of this sort of demand area, but we know that price is likely to come and head to take out the liquidity before it moves to the upside. So yeah, we just waited for price to come into this area. So if we play price forward a little bit, once price came into that area, I did the usual process. I went down to the 15-minute time frame and waited to observe a break of structure so that the 15-minute flips back bullish, and then we have an alignment between the 15 and the 4 hour, meaning that we have price being in a bullish trend on both the 15 and the 4 hour, which tells us that price is likely to head higher. So we play price on a little bit. And at this point, this is when I started to look at the potential entry, because we had a sweep of the previous low. We had a 15-minute change of character. And we also left behind this imbalanced level of 15-minute demand. If you zoom in, you can see we have left this imbalance and we have sort of this inducement above it as well. So at this point, I set the limit. But one other confluence that I noticed the following morning, I set this trade at around 6 p.m. sorry, on the Thursday. But on the Friday morning, what we can see is that if we get up the indicator, price consolidated above our level during Asia session, and we had this sort of consolidation range, building liquidity above our area of demand. So as I said, when price was around this point, I set the limit on this whole demand, stops just below, allowing for the wick in case this area gets wicked out. And I was simply targeting this hourly level of demand, supply, sorry. So this area just there for around a 1 to 4. So stop loss was actually a bit smaller, I think it was about there. And as I said, I expected a reaction from this level, but I didn't necessarily expect price to come up and target the previous high. I thought price may retrace a little bit lower because we have taken out that daily liquidity. So I think we need to retrace a bit lower before we come and take out the high. But nevertheless, price was bullish and we expected a reaction from this area of demand. So I was just targeting this area of supply as I thought price may reverse from this level. Once price tapped us in, we had this beautiful reaction and price pretty much impulse straight to the take profit. Then we had this pullback, price came all the way back to the entry, took out the initial tap just there. As you can see, we wicked below it, and then price flew to the take profit. And that is how I caught 4% on Euro Pound last week. If you guys did enjoy this video, or you have any questions about the trade, make sure to leave them in the comment section below. Make sure to like, subscribe, and I will catch you in the next video.